Hey all you cool cats and kittens, welcome back to another video. No, but can you imagine if I actually talked like that? I'd probably have 200 tigers and I'd be waiting to feed my husband to them. Carol Baskins. So for this week's video, I wanted to do something a little bit different than I usually do on this channel. I wanted to cover actually some of the moves that I'm looking to make in the near future here. Today, I actually jumped onto the stock market right as it closed and I didn't get the opportunity to buy into anything. So I wanted to share some of my future plans and where I see my portfolio headed. So listen, if you guys are new here to the channel, coming here for the first time, I talk a lot about the stock market. I talk about my moves personally. Here on this channel, I do what is called the Robinhood challenge, where I take $100 every single week and I invest that into the stock market. I share with you guys my tips, my tricks, my exact strategy so you understand where I'm coming from as an investor, and you can just follow along the process and learn with me as I go. So if that's something that interests you, make sure you hit that subscribe button and turn on the bell notification so you can be alerted when new videos come out. I post a ton of different content that you're definitely not going to want to miss. Jumping into my portfolio, you can see that the past day on the market was extremely well for my portfolio. I'm up around 6.3% at this very moment, which is a super solid return for one day on the stock market. Now, obviously, there's a lot of turmoil going on with the whole situation at hand, and stock prices are going up and down very drastically, taking huge swings. But anyways, today I was able to capitalize on around $282. And if you look at the past week, I'm still down. I'm down $27.69. It could be a lot worse, but we're trying to make a little bit of a bounce here. Over the past month, we're down $384.98. And last week, if you had looked at this number, it was down around $1,000. So really, we're fluctuating pretty hard with where we're at in the stock market. And over the past 3 months, we're down $933.30. And over the past year, just over $1,000. So the reason why my portfolio is down over $1,000 right now is because I was putting a majority of my money into the stock market when it was at all-time highs. And obviously that is going to have a severely negative impact on your portfolio as soon as the economy starts tanking, starts going down. So that's what you're seeing right here. But I promise you that a lot of you who are watching this portfolio and might not be, satisfied with the results you're seeing, come back here in a few months, maybe a year, who knows when the market's gonna actually turn around. Now, typically on Mondays, I show you exactly what I'm investing in so you can get a firsthand experience and see what's going on in my portfolio. But today, I didn't get that opportunity. I was working all day long and I didn't get a chance to step away to even look at the stock market or even think about investing rather. And honestly, I didn't even check out the market until after it had closed and I realized that it had such a solid day. So in honor of that, I'm going to switch up the background. All right, now that that's out of the way, there are a few different things that I want to cover, primarily what I'm going to be investing in coming up and what I see as a good value right now in terms of stocks. Keep in mind, I say this on most every video that I put out there, I am not a financial advisor by any means. I'm simply showing you guys my progress, what's going on. So hopefully you can learn from the experience. But what I really want to do is be documenting my experience. And I really am not at authority to be able to determine what you should be doing with your money. So always tread lightly when you're watching these videos and make sure you're doing your own research. One stock that I've been monitoring very closely over the past few weeks, especially with the given situation at hand, is Johnson & Johnson. This is an extremely solid blue chip dividend paying stock that really is diversified. And that's what I love to see in any companies that you're adding to your portfolio, is knowing that they're going to be able to stick it out through thick and thin and be able to prevail under any type of circumstances that they might get hit with. So Johnson & Johnson, very, very solid. They are a consumer products. They also deal with pharmaceuticals and medical device. So those are three very important aspects of the economy. And they're three things that really are going to be staying true for that company and just helping them out in terms of their revenue generation. Now, J&J is planning to have some clinical trials to help with the situation going on right now. And that is set to kick off in September. And it's going to be on a very accelerated track. So we should see some results from them relatively soon. And that's very promising. Though they don't have the highest dividend, they do still pay a really reasonable dividend at 2.9%. While I think a lot of different companies are going to be struggling in the year 2020, the one thing that really sticks out about Johnson & Johnson is that they've been able to pay their dividends and increase their dividend payments for 57 consecutive years. So obviously it's an emphasis for them. And in my portfolio, I love to invest in dividend companies. That's exactly my strategy. So Johnson & Johnson, very good stock for that. And I think they still are at a reasonable price, even though they're one of my few stocks that I'm actually making money on currently right now. I think I'm up around 3%. The second stock that I want to talk to you about is actually going to be Apple. And Apple is one that most people know about. Most people are actually holding it in their portfolio. But for me, I actually don't have a position yet. And that's because really I've been waiting for a good time to buy into Apple stock. And where the price was hovering around $320 pretty consistently for a long time, it's now dropped and it's right around $260. And I think now could prove to be a really good buy-in opportunity for a stock like Apple, and one that I want to take advantage of for my portfolio. So in the near future, you're likely going to see me making an investment into Apple. Now, Apple doesn't pay the highest dividend either. It's a little bit above 1% right now, but that's not really keeping me down too much on it. I know I love those dividend stocks, but for Apple, where they are an innovator and just introduce so many different things and have such great diversity towards their stock, there is really a lot that's going on for them that really works in their benefit. The revenue from their products, obviously the iPhone, the Mac computers, really the iPads that they have, you can pretty much guesstimate where it's going to be every time that they come out with new products, and that is pretty solid. So you know their finances are looking pretty good. And then the other thing to keep in mind is that there's so much more than just those initial products that they have to offer. Apple TV, for example, is one. The watches that they provide. There's also Beats by Dre, which they own. They have the HomePod accessories. There's so many different things that they offer, and they continue to grow their product line. So looking forward for Apple, there's a lot of great things to be coming. And you know that Apple's innovation is never going to stop. They're always looking to stay ahead of the game. They're trying to push competitors up to their level. You know, their biggest competitor is Samsung, and in my mind, Apple kind of blows them out of the water financially. And I'd much rather be in a stock like Apple, where it is now approaching some better buy-in points. So I'm really excited to take advantage of that. So the next stock that I want to talk about is AT&T, and they were one of my absolute favorite companies to be investing in when I was first constructing this portfolio, and that's not stopping. Right now, they are boasting a 7.23% dividend yield, and that is one of the biggest dividend yields that I'm actually holding in my portfolio, and they're just a very solid telecommunications company. For my personal portfolio, I'm down over 17% on AT&T, and I want to dollar cost average that down, drive that cost down, and get it turned around here pretty soon, because I think that they're going to start shooting up at some point. So here's my struggle. Many people ask me what I'm investing in personally. They ask me my opinion on the best dividend stocks out there, and to be honest, it's very hard for me to look much further than what's in my own portfolio, because I was investing at all of these when they were really, really high in value, and I still saw some great value out of them at that point in time. So many of these companies now that I'm looking at have dropped so far. I'm down, you know, over 20% on some of these. So in my mind, all I want to do is just get as much money as I possibly can and start putting it into these companies, because I truly believe that with my long-term dividend investing strategy, this is the best method for me to have a really great return in the long run. It's hard for me to narrow down my exact specific list on all the stocks that I think are really great buys, because the market is just so crazy right now, and I think there's a lot of different things that are undervalued and things that I want to be adding to my portfolio, but it's hard for me to do because my main emphasis is on, you know, dollar cost averaging for a lot of them that I see value in my portfolio. So I don't stray too far from what I'm invested in right now, but like I said, I still want to add a few different stocks to my portfolio while they are at very good buy-in points too. So it's a little bit of a dilemma and it drags out, and I know that it's not super interesting for everybody to watch out there, but it's something to keep in mind. Now, maybe you aren't a fan of individual stocks, you like having that diversification on ETFs. Well, this is one of my favorites right here. ProShares S&P 500 Dividend Aristocrat ETF focuses exactly on what it says in its name. It focuses on dividend aristocrats. If you don't know what dividend aristocrats are, they are companies that have been increasing their dividend payments for 25 consecutive years. So every single stock that's in this ETF has been increasing its dividend for 25 years consecutively. That is super great when you're looking for a dividend-centric portfolio. You're going to be getting dividends from this ETF. And you know that the companies that are within the ETF are actually solid, backed companies with that dividend focus. So you can expect to see a lot of great returns from something like this. And where the market has dropped so much, a lot of the stocks within this individual ETF has drove the price down for the ETF. So hey, it might be a really great time to buy into it. But don't just take my word for it. Make sure that you look into the holdings for this particular ETF. So I really like the companies that this is holding. And if you take a look, it's a really solid name. A lot of these are companies that I'm actually investing in my own portfolio aside from this ETF. So you already know automatically that I'm gonna like majority of what's going on with this ETF because some of its largest holdings are actually already in my portfolio. Okay, so I'm gonna say the hard R because I really don't think that this is over. Recession. Now, you need to start thinking about stocks that are gonna do well even when the market is going down in times of economic downturn. And you also need to know that, some of these stocks are gonna be doing extremely well even if the market is going up as well. So some of those stocks, for example, I really like Walmart. Walmart is in the minds of the consumers as a cheap place to buy quality goods, and you can save more and live better by their motto. And this is exactly what I like to see because a lot of people are still shopping within Walmart. They're spending their money there. They're still generating revenue, where a lot of different companies are actually losing money at this time because they just lose out on so much sales because people don't want to spend money. But Walmart is one of the places that people seem to flock to no matter what, even if they don't have any money. Same with Target. Target's another very solid one where even when you go into Target, you expect to buy a thing of toilet paper or some toothpaste, and you end up spending $120 on random things that you definitely don't need, but they always get you, and I'm not sure how they do it. Very solid for business on their end though. Another ETF that I've been throwing my money into is PowerShares S&P 500 high dividend but low volatility ETF. Now this is exactly what it sounds like as well. This is a high dividend paying companies that have the least amount of volatility on the stock market, and it is really, really great for your portfolio if you don't like weathering the fluctuations that happen. Now, obviously a lot of stocks right now are going up, they're going down so drastically, and this is just trying to mitigate that change. It's not going to go down as drastically as the market tends to go down, but it's also not going to jump as high when the market starts going up. So if you're thinking about a more safe kind of ETF to be investing in, this is one that I've just been seemingly shoveling my money at. Right now, I think I have around 31 shares and it costs $30. Now, my average cost right now, I'm going to take a look at it. The average that I have for this ETF alone is $37.71. So I'm down nearly 20% on this. And I think, as soon as this keeps dropping below $30, that's when I'm really putting more money into it. But if this were to drop, say, to $25 or something like that, I feel like that is going to be a really great value in my own opinion. Right now, it's already a lot cheaper than what I was investing in for the highest points in time. So I just really like to see everything that's going on with this ETF as well. Keep in mind that I am a believer of what's going on right now is not going to end anytime soon. I think the market's going to get a lot worse before it ends up getting better. Unfortunate situation. That's just my own mindset. I know a lot of people think we've hit that bottom, but let me know in the comment section, what do you think? Have we hit the bottom of the market, or is it going to continue to go down? Now, in a video like this, I'd be remorse if I didn't cover a stock, a company like Realty Income. And now they are a real estate investment trust. I know a lot of people out there watching this video are huge into REITs. They really love what they offer. So let me just talk a little bit about Realty Income. Now they are a dividend aristocrat. They've been increasing their dividend payments for 26 consecutive years. And we're looking at right now currently a dividend yield of 6.2%. Looking at the location of their properties and the types of properties they own, they are extremely diversified, so you don't have a lot to worry about in that aspect. Right now, Realty Income makes up around 10% of my portfolio. I believe 9.65% right now. So this is one that obviously I see a lot of potential in. I was investing when they were around $70, $80. My average cost right now is $69.30. So there's nothing really that I need to be worried about there other than driving my costs down. It's below $50. Right now it's $46.81. So I really love what I'm seeing there. And I have been continuing. I told you guys a couple videos ago, I'm all in on Realty Income. I want to take advantage of the dip that it has, and I just want to be able to put as much money into this as I can. Where I've only been investing around $100 a week, there's a lot of great opportunities for these stocks, but obviously I can't buy them all. So those are a number of ones that I'm looking at right now, and it's hard for me to narrow it down to one exact stock. So I don't know how I'm going to break up that $100 that I typically invest in, but it is very hard to choose sometimes. What I am really excited for though is that stimulus check to come in. I am planning on putting that into the market. It will allow me to invest a little bit more each week, and it's just going to provide me with a little more backing to my portfolio. So if you guys are wondering how I'm going to invest that $1,200, make sure you stick around on this channel. If you haven't already done so and you take anything away from these videos, make sure you smash that like button. I really would appreciate it. It helps me out as a content creator, and it also pushes me through on the YouTube algorithm. algorithm. So if you do enjoy videos like this, please smash that like button. Helps me out more than you can even know. And then also, if you guys are new and you guys want to see how I spend that money, make sure you're subscribed to my channel. Make sure that bell notification is turned on. And other than that, guys, I hope you did enjoy and I hope you have a great day. Stay safe and stay healthy.